the Nightly Business Report.
Good evening. Tonight, Director of Communications at the IMF says that they are currently in process of evaluating Sri Lanka's agreement with investors regarding the restructuring of its sovereign bonds. Committee on Public Finance has recommended that the controversial GBS-IVS VFS Global Visa deal has to be either cancelled or revised. The Colombo Stock Exchange marks a day of gains, thereby transforming the week's sentiment into a mixed landscape, reflecting the market's recent volatility. And the European Union antitrust regulator says that Apple will open its tap-and-go mobile payment system to the rivals.
From Studio 24, here's Sina Mayadune.
Good evening and thank you for joining us. According to a statement made by Julie Kozak, the Director of Communications at IMF, the International Monetary Fund is currently in the process of evaluating Sri Lanka's agreement with investors regarding the restructuring of its sovereign bonds. Kozak conveyed this information to reporters in Washington, emphasizing that the IMF team is meticulously assessing the specific terms of the debt restructuring agreement.
This evaluation aims to determine if these terms align with the broader parameters and the requirements of the IMF's program to Sri Lanka. Kozak explained that the team is in process of assessing the agreed terms of the debt restructuring and whether they are consistent with the parameters of their program, and once that assessment is complete, they'll be able to communicate their views on that. In addition to the IMF's internal review, the official creditor committee must also approve the deal made with the private bondholders. The dual-layered approval process ensures that both IMF and the committee are engaged in about terms and implications of the restructuring deal, providing a comprehensive assessment of its suitability and potential impact on Sri Lanka's economic recovery and financial stability. The IMF's assessment is a critical step in moving forward, as it will ultimately influence the support and guidance the organization provides to Sri Lanka in navigating its debt restructuring process.
State Minister of Finance Shahan Semasinha stated that Sri Lanka has reported a significant reduction of 2.76% in its public debt stock from last December to the 30th of April 2024. The reduced amount is 803.2 billion rupees. Primarily, there has been a notable 9.2% decrease in foreign debt. The State Minister mentioned that this positive trend reflects the country's effective debt management and strong exchange rate policies. The total foreign debt of the country was reported to be 12,076.7 billion rupees as of December 31st, 2023. By the 30th of April 2024, the total debt had decreased to 10,963.3 billion rupees. This represents a reduction in debt of 1,113.4 billion rupees. The Parliament's Committee on Public Finance has recommended that the controversial GBS-IVS VFS Global Visa deal be either cancelled or revised. They also suggested that the awarding of the deal without tenders should undergo a forensic audit.
The contract was awarded without a competitive tender and no specifications. The COPF chairman Harsha De Silva stated at Parliament today that the consortium was appointed without a competitive bidding process, preventing the Department of Immigration and Immigration from securing the best value for money. The GBF IVS VFS Global was charging cost around $25 per visa, but Mobitel was charging only $1. The systems were different by there were no specifications issued to bid, as is found in all procurements and tenders. De Silva told that if there were specifications and tenders, anyone including Mobitel or any other global company could have responded. He said the lack of specs raised concerns on the procedural integrity. He further stated that the absence of a competitive bidding process in the procurement of online visa services has likely resulted in an agreement that does not provide the best value for money.
A statement said that a third international duty-free operator is eyeing Sri Lanka's port city Colombo. This comes after the cabinet approved 2 operators to set up shop in the special economic zone.
China duty-free and One World duty-free were given the status businesses of secondary strategic importance by the Cabinet of Ministers. Shang Hong Feng, the managing director of the CHEC Port City Colombo Private Limited, said in a statement that their partners are now empowered to operate within the Colombo Port City Special Economic Zone, allowing an eagerly anticipated opening of the downtown duty-free mall to go ahead of the close of the third quarter in 2024. They further said that a third international luxury duty-free brand is exploring a collaboration at the duty-free mall concept, and will travelers in Sri Lanka will significantly have more choice. The port city stores use a downtown duty-free mall concept, which are also found in Singapore, Australia and China.
Sri Lanka's State Transport Minister Lasantha Alagiyawanna sees privatisation of railways as a permanent solution to prevent inconvenience faced by the public due to the strikes by railway employees.
Alagiyawanna's comments come after millions of people faced inconvenience after the Railway Station Masters Union launched a strike earlier this week, demanding some vacancies be filled and other administrative issues to be resolved. Hundreds of scheduled train journeys were cancelled due to the strike, leaving very few trains that ran jam-packed with passengers. He said strict state regulation should be in place when the government goes for privatising. President Ranil Wickremesinghe has proposed to go for a privatisation or public-private partnership for mainly loss-making state enterprises in line with the economic reforms under an International Monetary Fund loan.
Manila-based Asian Development Bank said it had approved a $100 million policy loan to support reforms in the power sector in coordination with the reform program backed by the International Monetary Fund.
James Kolantharaj, ADB's principal energy specialist, stated that developing cost-competitive renewable energy and ensuring a reliable and affordable electricity supply, along with establishing a transparent and independent power sector regulatory framework, would assist Sri Lanka in driving economic growth and addressing the current financial and economic crisis. This program will support reforms in power sector introduced under Electricity Act, including institutional and regulatory reforms, and improve operational sustainability of the electricity sector. The reforms will help to create a conducive environment for private investments, boosting renewable energy development and modernizing power grids. It will support regulatory reforms with the implementation of a new national tariff policy that will improve financial stability of the sector through cost-reflective tariffs. The Asian Development Bank will provide a $1 million technical assistance grant from its Technical Assistance Special Fund to support the program implementation.
Let's go for a short break. This is the Nile Business Report. Welcome back to the Nile Business Report. The recent performance of the stock market has been characterized by fluctuations with alternating days of gains and losses. After a day of gains followed by a day of losses, it is now returning once again to the positive territory today. Both the indices recorded gains at the end of today's market session. And to get more details, let's go to Minal Wickremesinghe from Capital Alliance Securities.
Yes, Sina. At today's trading session, the Colombo Stock Exchange concluded on a positive note compared to the previous day, brought on by slightly improved sentiment among market participants. The market ended at 11,843.97 points, marking a 41.7 point increase from the previous session, with a turnover of 653 million rupees. The SL20 index also experienced an upward movement of 27.91 points to end the day at 3,463 points. Notable institutional engagement was observed across various sectors, with crossings recorded on John Keel's holdings today. Top 5 gainers for the day were SMB Leasing Non-Voting, Industrial Asphalts, UB Finance, Kotpale Holdings and Hella Apparels PLC. The top 5 losers for the day were Tess Agro Non-Voting, Paragon Salon, Salon Printers, Lee Hedges PLC and Tess Agro Voting.
The stock market has been on a roller coaster ride recently, alternating between gains and losses. Overall, the week has seen a predominance of losses marked by 3 days in the red, contrasted with 2 days of gains. To provide an overview of this week's market performance, we turn to Ranjan Ranatunga joining us from First Capital Holdings.
Thank you. During the week under review, the Colombo stock market had a tough period of time as both ASPI and S&P SA20 index fell by 0.9% and 1.2% respectively during the week. The main negative sentiment surrounding the negativity in the market was driven by the announcement of the upcoming presidential election dates, which kept investors in bay. At the start of the week, the All-Share Price Index took a big hit, falling by 162 points just in 2 days. However, on Wednesday, it found support around the 11,800 mark and started to bounce back. This rebound was thanks to the buying interest seen on index heavyweights as well as on banks. Overall trading was pretty slow as many investors chose to sit on the sidelines due to the political uncertainty in the arena. Daily trading volumes dropped significantly from 1.3 billion rupees to 620 million rupees during the week. On a brighter note, foreign investors were net buyers for the week, putting in 77 million rupees more than they sold. And they bought stocks worth of 312.8 million and sold stock worth of 235.6 million shares during the week. So despite the ups and downs in the market, with a cautious recovery in the midweek driven by selective foreign buying interest, the market saw a rebound during the last 2 days to close the week in a positive note. Thank you.
Gold prices fell slightly in Asian trade today, but were sitting on strong gains from the prior session as softer than expected US inflation data ramped up bets on a September interest rate cut. Spot gold fell 0.3% to $2,408.52 an ounce, while gold futures expiring in August fell 0.3% to $2,413.75 an ounce. The yellow metal blew past the closely watched $2,400 an ounce level yesterday and was less than $50 away from a record high, as it benefited from a sharp drop in the dollar. Gold was also set for a strong weekly performance. Gold heads for weekly gains amid rate cut cheer. Spot prices were set to add about 0.7% this week, with a bulk of gains coming yesterday. Oil prices rose today, driven by a combination of factors. Optimism over potential US interest rate cuts and improved summer demand provided support, though oil was still set for weekly losses due to some profit-taking. Brent oil futures for September delivery rose 0.1% to $85.52 per barrel, while West Texas Intermediate crude futures increased 0.1% to $81.49 per barrel. Speculation around a ceasefire between Israel and Hamas also led traders to attach a lower risk premium to oil this week, though an actual agreement still seemed unlikely. The Sri Lankan rupee has appreciated further against the US dollar today, according to the Central Bank of Sri Lanka. Accordingly, the buying rate of the US dollar has dropped from 299 rupees and 4 cents to 298 rupees and 27 cents, while the selling rate has also reduced from 308 rupees and 34 cents to 307 rupees and 46 cents. Let's see the fluctuation of the rupee against the other global currencies now. A short commercial break now. More updates right after this. This is the Naila Business Report. Welcome back to the Naila Business Report. Star Garments Group announced its plan to build a large-scale apparel export manufacturing factory in Togo to boost the West African country's textile and apparel capabilities through a financing package that includes a $15 million loan by the International Finance Corporation, who is a member of the World Bank Group.
The move marks Star's first manufacturing facility outside of Sri Lanka. This project aims to create thousands of jobs in Togo, putting Star on the global map as a multiple country of origin supplier. Star's facility will also be the first large-scale apparel manufacturing facility in Togo. Star will build a greenfield clothing factory in Togo, which will be an industrial park, providing around 4,520 direct and indirect jobs, especially for women, and contribute significantly to export-oriented value addition by 2030. The $15 million by IFC will comprise $7.5 million from its own account and another $7.5 million loan supported by the International Development Association Private Sector Window Blended Finance Facility. Star is a long-standing brand in Sri Lanka's apparel industry with over 4 decades of experience, backed by a team of over 9,000 people. West Africa's textile and apparel sector holds significant growth potential, with the region having a large and young talent pool. There have been improvements recently that are favorable to the sector, such as building ports and establishing special economic zones.
The premier international textile sourcing platform in South Asia returns to Colombo for its 10th edition. This year, Intex Sri Lanka will be held on the 7th to the 9th of August 2024. It's expanding across 4 halls at BMICH to support the industry to achieve $8 billion garment export target by 2025.
This dedicated trade show empowers Sri Lankan businesses to widen their product range, strengthen exports via networking with international suppliers, and consolidating intra-regional partnerships to enable manufacturing through collaboration. A must-attend event, this Sourcing and Trading Expo enables the Sri Lankan RMG industry to source a vast array of natural and man-made textiles, trims, accessories, dyes, chemicals, and software solutions by connecting with over 200 suppliers from over 15 countries, with country pavilions from India, Taiwan, Pakistan, China, as well as textile showcases by Korea and Japan. This year also marks the debut of NMAC, a boutique garment machinery and technology showcase co-located with Intex Sri Lanka. From advanced technology in sewing and embroidery to digital fashion technology solutions, NMAC will see participation by Sri Lankan and Indian companies, along with representations of products and services from over 10 countries. Endorsed by the Sri Lanka Export Development Board and Joint Apparel Association Forum, along with its member associations, both Intex and NMAC will offer comprehensive sourcing solutions for every stage of apparel production.
ASRI Group of Hospitals, trusted for high standards in patient-centered care, has signed a landmark agreement with the National Insurance Trust Fund to provide comprehensive concessions to all government employees through the Agrahara Medical Insurance Scheme.
The Memorandum of Understanding was signed by Dr. Manjula Karunaratne, the group's CEO of ASRI Hospitals, and Gamani N. Lianarachi, the CEO of NITF, during a ceremony held recently. The event was attended by several distinguished participants from both organizations. The enduring partnership aims to offer tangible healthcare benefits and the renowned comprehensive healthcare services offered by ASRI Hospitals to all NITF Agrahara members. It marks a major milestone in ASRI Hospital's commitment to build long-term collaborations that benefits the community.
Arpico Mattresses, a leading brand in the mattress manufacturing sector in Sri Lanka, organized an appreciation ceremony for its sales representatives recently. This event was held at the Monarch Imperial Hotel premises in Battaramulla. During the event, Arpico also introduced a new trio of mattresses to the market.
At the event, Arpico Mattress rewarded the sales representatives across Sri Lanka who demonstrated exceptional sales skills with awards and free overseas trips. Additionally, the introduction of 3 new mattress products manufactured in Sri Lanka to the market can be considered a special event. The trio of mattresses has been branded as 100% locally produced. Arpico introduced these mattresses to provide consumers with a comfortable sleeping experience. The 3 mattresses are known as Arpico Green Comfort, Arpico Duke and Arpico Activa. The Apico Green Comfort mattress is made using 100% natural rubber latex. The Apico Duke mattress is a 6-inch double-layered mattress with additional back support designed to provide a restful sleep. The Apico Activa mattress has been specially designed to offer restful and rejuvenating sleep to all those with an active lifestyle. This mattress is primarily produced to provide comfortable sleep for athletes.
Let's take a short commercial break. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asian stocks were mixed today, with the yen moving between gains and losses after the latest update on inflation bolstered Wall Street's belief that relief on interest rates may come as soon as September. Tokyo's Nikkei 225 index lost 2% to 41,388.92. Hong Kong's Hang Seng index climbed 1.9% to 18,165.33, while the Shanghai Composite Index was down 0.2% to 32,965.52 after data showed that China's exports increased by 8.6% in June, better than the market expectation. Australia's S&P ASX 200 was up 0.8% to 7,952.20. South Korea's Kospi slipped 1.2% to 2,857.11. The Nasdaq ended sharply lower, hit by losses in Nvidia, Apple and Tesla as investors rotated into smaller companies after softer-than-expected inflation data. Fed bets the Federal Reserve will cut interest rates in September.
The Nasdaq ended sharply lower on Thursday following a string of record closes as investors rotated out of big tech stocks and into shares of smaller companies. The Dow edged up marginally. The S&P 500 fell, losing about 0.9%, and the tech-heavy Nasdaq plunged roughly 2%. A Labor Department report showed U.S. consumer prices fell unexpectedly in June, and the annual increase was the smallest in a year, drawing the Federal Reserve closer to a September rate cut. Despite signs of receding inflation, Wall Street's most valuable companies lost ground, with Microsoft and Amazon each losing more than 2%, Meta Platforms dropping about 4%, and AI chip darling Nvidia shedding 5.5%. Shares of Tesla tumbled 8.4%, its biggest one-day percentage drop since January, after Bloomberg News reported the company is delaying the launch of its robotaxi by about 2 months to October. Shares of Apple fell 2.3% after hitting a record high on Wednesday. Still, BofA Global Markets raised its price target for Apple, saying it expects strong iPhone sales driven in part by new AI features. On the flip side, the small-cap Russell 2000, which has significantly lagged the S&P 500 in 2024, jumped 3.6% to close at its highest since March 2022, with investors betting rate cuts would improve conditions for smaller companies.
The European Union antitrust regulator said that Apple will open its tap-and-go mobile payment system to rivals, and also said the iPhone maker has yet to change its business practices to comply with landmark tech rules.
Apple may have fought off a potential hefty fine from the EU. The US tech giant said it would open its tap-and-go mobile payment systems to rivals. That's according to EU antitrust regulators on Thursday. The move ends a 4-year-long investigation of the iPhone maker. The EU competition enforcer charged Apple 2 years ago with hindering competition for its Apple Pay mobile wallet. It accused the company of blocking rival app developers from accessing its tap-and-go technology. The European Commission said Apple's new offer would be valid for 10 years. EU antitrust head Margrethe Vestager said competitors will now be able to effectively compete with Apple Pay for mobile payments with the iPhones in shops. Apple's tap-and-go technology, called Near-Field Communication or NFC, allows for contactless payments with mobile wallets. It will now permit developers to access its NFC to pre-build payment apps for rival mobile wallet providers. Apple said its offer would give European developers an option to enable tap-and-go payments for numerous features within their iOS apps. It includes car keys, home keys, corporate badges and more. More than 3,000 banks and issuers in Europe offer Apple Pay.
Well, that wraps up our final bulletin for this week, and we'll see you again on Monday with the latest happenings. And until then, I'm Sina Mayadune. Have a great weekend and good night.